Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today's Tuesday. It's February 14th. It's actually Valentine's Day. And if any of one of you took that Valentine's trade, remember, we have to exit it today. We got in on the 10th at the end of the day. We get out on the 14th at the end of the day. And if you've made money from that trade, send me an email, support@marketgeeks.com. Post a comment in the YouTube channel. And I hope each and every one of you has a wonderful, wonderful Valentine's Day. Now, it's 7:42 in the morning. The market's going to gear up to open up in about an hour and, let's see here, almost 2 hours, an hour and a half, an hour 45 minutes. It's too early, and I'm starting to do these videos a little earlier because people are asking me to do them earlier. Anyway, the NASDAQ is up about 49 points. The Dow's up 39 points. This is very random action. This means nothing, especially in the light of earnings. Speaking of earnings. Yesterday we had AAP report. We had Avis Car report. We had Denny's report. We had Palantir report, SolarEdge, Varnado Realty Trust. Today you've got Coca-Cola. It's a big one. They're expecting 45 cents a share. That's flat for the year with a revenue of $10 billion. Now, typically Coca-Cola would be a market-moving report because that's a big consumer staple. But we've got a big Fed report today, which I'll get to in just a few minutes. We also have, just to give you an idea, we have GoDaddy, what a name, right? Herbalife, Marriott's coming out, Peabody. You've got others like TripAdvisor, other companies are coming out, and then tomorrow we've got Cisco. But we're still, you got about two-thirds, about 5/8 or two-thirds of earnings out of the way now. But folks, it's not over till it's over, all right? Now, the big report, the report that everybody is going to be talking about, everybody's looking forward to, is coming out today. It's coming out actually in a little less than an hour, in about 45 minutes, and that's the CPI. Now, the CPI is what everyone's looking at to determine whether inflationary pressure has in fact peaked or it has not. And from where I'm sitting right now, it doesn't look like it has peaked. It looks like it's got a little more to go, but I think we're getting closer. And also remember, even if it's going lower, it doesn't mean the Fed is going to stop. They have a very specific level they're going to stop at, and they want to have the Fed fund rate near the 5.25, 5.4 basis point. So I don't think we're there, but this is what you need to look at. A lot of people are going to be looking at the year-over-year number. That means absolutely squat. What we're looking for is the number to be lower than the previous number. The previous number was 5.7. We're now looking at 5.5. If the consensus is 5.4, 5.5, then Powell will go and say, hey, we're not doing so bad. We're moving in on the right side. Everything is looking hunky-dory. And the market may rally a little bit, although I think most of that is priced in. I think they're looking for a new catalyst. We will see. But if the number is 5.7, 5.6, 5.8, then the Fed is going to say, well, we told you we've got a lot more work to do. So keep your eye on that number. That is going to be the big report. Then tomorrow you've got retail sales and industrial production, and then you have the PPI. So you've got the CPI, and then you've got the PPI, and that's coming your way over the next 3 days. So no, over the next 2 days, today, tomorrow, and then the next day. But the CPI will lead things off. Now, as I mentioned, let's look quickly at the stock market. The NASDAQ right now, it's been building in this little flag kind of a pattern. And to me, this looks like it looks like we're going to stay in this range. I don't think we're going to break out of this range unless the number is just fantastic. And I mean fantastic, like maybe, I don't know, maybe 5.1, 5.2. Then I could see that the text would rally. If this number is like 5.2, maybe. But honestly, based on what I'm seeing right now in the QQQ, I think we're going to consolidate and keep going choppiness till this flag comes back down to the 200-day, because I don't think there's a major catalyst. And if you look at the Dow Jones right now, you will see that it's kind of doing the same thing. It's very choppy, and it hasn't broken out. And even if it does break out, you've got a high right here. So I'm not really optimistic that the stock market is going to sing the song we want it to sing, especially in light of the fact that momentum levels on communication services are coming down. Only 56 versus 76, and I mentioned to you that was going to happen. Overall, let's look at the bond market. It's slow today. There we go. if you look at the bond market's been kind of choppy too. It hasn't really gone anywhere the last couple of months. It's been kind of doing a here and wait between the 200-day right here and the current price level. Let me just remove these studies. You don't need them right now. Or this. Yeah, so you could see how the bond market's been just gyrating. I think it's going to continue moving lower. If it continues moving lower, it's going to increase rates. I think it's going to come down to this level. We have to watch it very, very, very cautiously today because we just don't know what to expect. It's a wild card. And then you've got on top of that, you've got retail sales tomorrow, which is going to be a pretty powerful report. So we got to be very, very careful. Keep your eye on the bonds. If the bond starts sagging, that's going to put pressure on tech stocks. If the bond starts rising, that's going to be really, really good for tech stocks and the S&P 500. Now, let's talk a little bit about global news and what's going on at the table, kind of review what we just discussed too. So investors are taking an optimistic stance ahead of today's CPI report that could hit at the path of the Federal Reserve future interest rate hikes. I think the Fed has already made up their mind, and I think they know exactly how far they want to go. And I think they've got another 2-3 moves left. Meta rose about 3% after Financial Times reported on Sunday that the company would like to announce a fresh round of job cuts. Microsoft gained 3% after Stifel adjusted the price target to $290 from $275. So there is some activity. It looks like Wall Street is doing everything possible to prop up this tech. But Fed Governor Michelle Bowman said Monday she sees the need to continue to raise rates and then hold them at a sufficiently restrictive level to bring inflation back down to the central bank's target. So very, very simple, very, very effective. And I'm telling you, they're going to keep doing it till it's about 5.25, 5.2, 5.4. Fourth quarter earnings season, meanwhile, winds down. But we still have a lot of stocks to go this week. We're now expecting a decline for 3% for the quarter. That's a lot worse than we were expecting about 2 months ago. We were expecting like 1.6 negative. Now it's 3% negative. Not good. Major companies like Coca-Cola, Airbnb, Marriott, they're all coming out today. It'll be interesting. But honestly, most of trading action is going to be overshadowed by what you guys are seeing in the from the CPI report. I'm just being straight with you. All eyes are on the consumer inflation in a couple of hours, actually in less than an hour, in about 50 minutes. And again, nobody cares about the year over year. We only care about month over month or quarter over quarter. That's it. In Europe, Eurozone GDP came in at 0.1% and 1.9% in the fourth quarter, in line with expectations, which is not the worst thing. According to data, they barely avoided a recession in 2022, which is great. And it looks like we may barely avoid a recession in 2023, although I think we are already in one, and we've been in one for a while. U.S. Secretary of State Anthony Blinken is considered a meeting with senior Chinese diplomat. The move marks a slight easing of tension between the U.S. and China. I still want to know what they've been blowing down. Are these air balloons? Are these UFOs? What the hell is going on here? Japan, preliminary data on Tuesday showed the Japan economy returned to growth in the 3 months through December. So there's no major issues there. As far as movement, you've got Avis, it's up 2% pre-market. You've got Occidental Petroleum up 1%. Goldman Sachs upgraded it. And if we look at the energies right now, broadly speaking, energies are still holding on. It's still a strong buy according to bar chart. But honestly, we're not all that far off our highs. This is all-time highs at 94, and we're at 89. Now, let's look at each individual sector because, well, why not? That's what we do around here, right? All right, let's look at... All right, well, financials are looking wonderful, as I promised you they would. Energy looks like it's starting to come back. Utilities, I don't know about utilities. Consumer staples is starting to make a move. Consumer discretionary, it's going down. It looks like it's starting to come up, but it actually is going down. Technology looks like it's holding on pretty well. Industrial stocks looks like it's holding pretty well. Healthcare looks like it's starting to make a little noise, but it looks a lot like utilities. So I would hold on and wait on that. Real estate is starting to come back up. Basic materials is looking okay. Communication services, not so sure. It did fill the gap, but I think we're going to break lower. Things are looking a lot more bullish than they did a few months ago, okay? They are. But we're going to have to wait and see what happens. Now, when you're looking at this technically right here, you will see that technology and communication services are still the number 2 sectors. And consumer discretionary is holding on. And as I mentioned, I think this is going to start coming down. I don't think this is going to be increasing. I think it's going to be decreasing, especially with the fact that there's no major catalysts out there. Now, what do we do today? We talk about strongest sector, strongest stock, weakest stock. So let me show you a good stock right now in a good sector that I'm liking. All right. So one of the stocks that let me give you a couple here. Steel Dynamics, it's an industrial stock. I really, really like this stock. I like, where is it? I like Wynn Resorts right now. It's looking really good. Las Vegas Sands is looking really good. United Rentals is looking really good. And On Semiconductor is looking good. Those stocks are looking great. Now, in terms of the worst stocks, oh boy. Let me give that to you. Oh, we got some nasty ones. Match.com, not a good consumer discretionary stock at all. I don't want to talk about Dish because it did meet our target, so we're not going to go there. Let's see here. Let me give you some nasty stocks. Oh, Expedia. Expedia, I would say go with Expedia and go with Match.com. The consumer discretionary stocks, I think that with the economy cooling off, those dating sites and travel is going to, and with energy prices elevated, I think that consumers are really going to start feeling it. So be very, 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 very cautious. Remember, we also have a lot of layoffs. Layoffs, people, when they don't have a lot of money, they don't date, they don't go out, they kind of, they do their own thing. So be very, very cautious. Now, before I let you go, folks, some investors might not realize this, but markets is very, very fragile right now. If you watch these videos, you've seen me point out how fragmented some of the major sectors are at a time when the Nasdaq is just beginning to pull back. Investors are about to be blindsided with massive amounts of cash to start to flood out of their favorite stocks. I'm telling you, it's happening. And while this could spell disaster for anyone holding these stocks, investors who realize when the cash is going and how to take advantage of it can profit big time. And that's exactly what New Money Crew Lance Ippolito is about to reveal during his live event today at 1 p.m. Eastern Time. It's free. It doesn't cost anything. Lance is red hot. You don't want to miss out. It's going to be a lot of fun. It's going to be a great time. I want you guys there. 1 p.m. Eastern Time. Follow the link below. Don't miss out. I'll talk to you guys soon. Have a great day. Remember, post comments and love letters in the YouTube Wealth Press channel. I will respond there. And have a happy Valentine's Day. If you made money on that trade, that Valentine's trade, let me know. Give me a heads up. Send me a love letter. Support@marketgeeks.com. Bye.